Good morning, everybody, and welcome to episode 7 of this series of webinars, Crystal Clear Complex Cases. You've got myself, Dan Morris, Key Account Director at Crystal Specialist Finance, and I'm joined by two of the industry's best in terms of knowledge and experience. We've got the one and only Roger Morris from One Savings Bank, the Group Distribution Director, and then, as most of you know John by now, you've got the tax wizard of Alexander & Co., John McCaffery. Morning, gents. How are you doing?
Very well. Good morning.
Morning, good. Dan. Morning, guys. Thanks for tuning in.
And thank you both for joining me and making these webinars, well, what they are. So just briefly before we kick off, the agenda for today, as a lot of you may know, and for the newcomers, there isn't one. So ultimately, we've got some pre-asked questions, which are brilliant, and we'll go through those. But essentially, the audience, yourselves, you make these webinars and the content what you want. So what I would say, anything that we are discussing that's thought-provoking, anything you want to hear from a taxation point of view, a lender's point of view, a packager's point of view, then please do ask. Marketing have asked me though, if you can please put the questions into the question tab and not into the comments to the attendees, please, so we can answer them. And that's pretty much it really. So we'll see where this webinar takes us. We will look to finish at 11:30, so go no longer than an hour. And again, let's hopefully have another decent webinar, a decent session, and have lots of great content. So we're in Q4, guys, which is just absolutely ridiculous, isn't it? I mean, this year's just gone really, really quick. I don't know about you guys, but I think we're ready to get into 22. I think now we're seeing a steady increase back in terms of activity for cases, clients coming back to you, whether it's purchasers, remortgages, whatever. But I think we have seen an increase in activity for new business, certainly on the back of Q3. What are your thoughts, Rog?
Yeah, do you know what? First, Dan, I wanted to say for thanks in advance of the questions that we got from Andrew, Chris, Ferry, Mark, Simon and Warren. We will get through these today. It's certainly going to see John at his best on the back of these, Dan, and some really great questions for you. The other thing I'm really proud to announce is we put off and delayed till this morning the relaunch of the Precise Bridging range, which I think we'll give the highlights, Dan, but anybody out there that's a little bit unsure about bridging, wants to know if they're getting the most competitive price, you can't beat Crystal, because, Dan, you always say it best, when it comes to bridging, you won't be beaten on price, service, turnaround. And I think what Crystal does in that partnership between Precise and Crystal, yeah, you've got the option to go to lenders direct, but speed and the accumulation of marginal gain in bridging makes a difference. And unless you do it full time, you really can get a poor result, which, Dan, is similar to John McCaffery. John, it's the same with tax advice, isn't it? You need to be an expert. So morning, John, and we'll comment. And by the way, guys, if anyone's texted in that think John has gone and had surgery because he looks so much younger, he's lost nearly a stone. And ladies and gentlemen, yeah, he does look amazing. So John, over to you.
Thank you very much.
Yeah, no, you do. You've, do you know what? The launch of the bridging came at a perfect time. Again, we do speak about bridging fairly frequently on these series, and that's absolutely market leading. One, just from a lender fee point of view at 1.5%, which all lenders or most lenders in the market are charging 2%. But the fact that you're paying away, well, all of that and more is fantastic. So what I would say is, if anyone does have bridging finance, we probably will discuss throughout this webinar, then speak to us, because you've got a great exclusive with some fantastic rates, but more to the point, cheap fees for your clients, but you get paid a fantastic amount. You're looking at least 1.1% of that loan amount as a proc for yourselves. So it's an absolute no-brainer to consider us and consider Precise for bridging finance. Just quickly on a compliance note, because I'll see a little pop-up in a second that says mention it. So both myself and Roger are not suitably qualified to speak around tax advice. Also, all views and opinions that we're discussing today are our personal views and not anywhere linked to Crystal or the One Savings Bank Group. But John has absolute free rein. He's a tax expert. He's qualified. He's suitably qualified to have these conversations. So yes, take what John says as advice if you want to, because he can advise, but we can't. So I think we should just kick off into the first question. Yeah.
Dan, have you got one? Because there's one I got really quite excited about. Are you happy? Let me pick this one. and then you pick the next one because there's a few related to Crystal. So Andrew Grant, honestly, when I saw your question, it just made me smile, because I think what you talk about here, and this is coming straight to you, John. What Andrew Grant's question is, it's properties, flats over commercial premises. Now, anyone listening in respect, that bit's irrelevant. It's specific to Andrew, but this is still a generic question. It could be this. John's answer will be the tax advice he's about to give can be to any types of portfolio, but Andrew has done it, and it's about moving portfolio to a family investment company. So Andrew, with those types of properties, me and Dan can speak about many lenders that would lend to them in a limited company, but it's about a family investment company. What is it? What is it about? Is it something weird and wonderful or not? And the value of getting the right advice now, what I would say is this is something particularly pertinent to me, and it's something that this particular type of structure I think is very relevant to me, is what is the cost of something? It's the cost that you would get on the right advice, and not think about getting the cheapest advice, because it might end up being the worst advice. It's about going to someone that you recognize as an expert in the field, paying the appropriate cost, and these fees are tax deductible in limited companies. I think I'm right, John, and you'll answer that in a second. But it's that structure for the rest of the time that you will be alive, and I'm sure on your deathbed you will think as you smile and disappear off the next life of John McCaffery. So John, take us through and explain everything about family investment.
No worries, no worries. And a friend of mine came up with a very, very good phrase regarding the whole value type structure. A family investment company is one of those arrangements whereby it's a cracking piece of tax planning, but it's entirely up to the individual as to whether they see the fee or see the value. People who see the fee might not want to pay it. People who see the value could save an absolute fortune, Are they complicated? Not especially, but they are a little bit more complicated than your average company. So I think everybody out there is probably well aware of the fact that property is not a good asset to hold from an inheritance tax point of view. If you hold property or you hold shares in a property company, and those properties are what I would call investment properties, and that means you're holding them as an asset to make an income return through the rental stream, they fall within your estate for inheritance tax purposes. It doesn't take a lot of property to use up your standard allowances. So between a married couple, the standard inheritance tax allowance you can have is 650,000, but that covers everything you own. So your cash, your family home, property investments that you have. If your estate is less than 2 million, that might get bumped up to £1 million between a married couple, assuming you leave your main property, your main home, to your descendants, right? But on some decent sized portfolios, you're looking at basically handing over 40% of the value in that portfolio to the revenue on your death, unless you do some sort of structure that puts that value outside of your estate. Okay. Now, a long time ago, some people might know this, some people might not, trusts were the way to do this. Because trusts were really good, they put everything outside your estate and the tax rates were low. The problem with trusts now is that the rental stream is heavily taxed, and there is an often inheritance tax charge on the way in to the trust. Okay? So in the right circumstances, a family investment company can work as a really good or suitable alternative. It's great if you can start your portfolio in one. It can work if you want to move your portfolio to one. In essence, a family investment company is a company, and it's nothing more complicated than that. The thing about a company is that the owners of the company own shares. Shares have 3 rights attaching to them. They have a right to income through dividends. They have a right to vote, to control the company, and they have a right to the value of that company, which in property means the value of the underlying properties in the company. And you can split those rights any which way you like between the shareholders. So the way a family investment company works, let's start with a situation whereby you're setting up from scratch and you're about to build your portfolio. You set up a company and you've got you as the shareholder who's got money they want to put into a business in order to build a property portfolio. So they set up the company with an A class of share, 80% of the votes, a discretionary dividend right, so they've always got a right to income, but the capital value or sales value is restricted to the value of the company on day one, right? And so let's say you've got £1 million, you loan your £1 million to the company, and because in companies there's always got to be 2 sides to an entry, that company therefore owes you £1 million. So £1 million cash in results in a loan back out to you for £1 million. So the value of the company is nil. You then use that cash to buy your properties, right? And there is a B class of share. The B class of share can go to your kids, it can go to a trust, either structure works. Those shares have, let's say, 20% of the votes. Now, 20% of the votes is not enough to give anybody any influence. They have a discretionary dividend, but you're the A shareholder with 80% of the votes, so you control that dividend. But all the growth in the properties goes towards the B shares. So you can build your portfolio very nicely, and all that value falls outside your estate for inheritance tax purposes. The other aspect from inheritance tax, as I said at the beginning there, was that there's £1 million loan. If you need a sizable chunk of money out of your company, you can have that loan repaid tax-free. If you decide you don't need that, you can gift that loan, and after 7 years, that falls outside your estate as well. They're a really, really useful tool, but you've got to make sure the circumstances are right. So for example, let's say we transfer in an existing portfolio. On an existing portfolio, you may have capital gains on the way in. You may well have stamp duty land tax on the way in, but then it's a comparison between those costs and the cost of the inheritance tax you're going to pay. Will that do?
I think that'll do just fine, yes. Yeah, and I think, you know, that's a great explanation. It wasn't too in-depth. I think it was just the right level. And on the back of that, someone has asked, which you did cover off, but you might want to cover off in just a slight bit more detail. Can you have minors as shareholders?
You can have minors as shareholders, right? So with relation to minors, what you've got to be a little bit careful of, they can absolutely be shareholders, right? But if you pay them a dividend whilst minors, that will be taxed on you as a parent. So you can only really pay them dividends once they're in the majority. Secondly, what you need to be a little bit careful about, this is why trust structures may be useful, is if your children get married and they are direct shareholders, those shares are potentially in the, if they divorce, there's an issue with those shares. Your children may like sex, drugs and rock and roll far too much, and again, you need to keep an eye on the fact that, you know, you don't want your kids snorting inheritance. So occasionally a trust should be given consideration, but it's very, very much down to the circumstances of the particular arrangement and family.
And just from a lender criteria point of view, for instance, if John was going to do that with his wife and John had 3 children who were, say, one child could be 6 months old, and then someone say 7 years and then 14, from a lending point of view with Precise and Kent and those examples, the children can go on as shareholders, no problem. They obviously don't have to sign any personal guarantees. So in effect, you can get children or grandchildren up the property ladder from a very early age. So lenders are very supportive of this, which works really well. And I think you explained that really well. Any points for you, Dan? Any questions for John? There is a question come up. Do properties,
Yes.
Charlotte calls.
Right, so in relation to the trust, so sorry, should I read that out? I think it was in the chat.
Do properties in buy-to-let limited companies come under your personal IHT liability?
Yes.
Is that it? Just a yes?
Yes.
In a nutshell.
The way it technically works, right, is that in your estate are the assets you own. So you own the shares in the buy-to-let company. The value of those shares, as I said earlier, is based on the value of the properties. So whilst technically the properties themselves are not in your estate, the value of those properties is through your share ownership.
Wow. Okie doke. That's
Perfect,
brilliant.
thank you. Roger, you want to just block your ears for this one? John, another one from Mark. If there was a family fallout with minors, can you undo the trust?
Right, so you don't need to undo the trust. If you had a full fallout with minors and you wanted it all back, you can, but there'd be quite expensive exit charges. If you had a fallout with, say, 1 or 2 of the minors or your children, the way you set up the trust is you set it up as a discretionary trust. And that means the trustees of a trust are responsible for the assets in a trust, but it is entirely at their discretion as to who benefits. So you can actually stop the benefit going to particular minors if that's what you wish.
Okay, perfect, brilliant.
Wow.
I think that's very comprehensive in terms of that. And I think the main takeaway for me from that, I suppose, answer is the fact that the fee versus value, really. I think that's the key point and kind of what you touched on there, because, again, you get a lot of people that, similar to when you're choosing a solicitor, you look for the cheapest one, and you know what, they're not always the best. And actually, over time, it works out to be the most costly one in terms of overall fees. So I think, again, that explanation that you mentioned there, say your fee versus the time and versus the value, you actually look at all of the options available to that particular client rather than that particular tax advisor, broker, lender, whatever, just being narrow-minded in terms of the offering that they've got. It's kind of like OSB. They are, one-stop shop, really, in terms of what they're offering. So you've got your commercial, your resi, bridging, all that sort of stuff. And you've got full options there. Whereas the likes, if you go to, say, HSBC on the high street, as much as they're brilliant at what they do, they only do a select thing. So I think it's looking at the overall value that you can add as an individual or firm or as an advisor, and do you know what, your fee's justified. And I think that's pretty similar to bridging. And that's what I was going to mention previously. A lot of people look at the fee for bridging finance, see it as expensive from an interest rate point of view, but actually they don't look at the end value of what that bridging loan is going to achieve for them in that particular situation.
Yeah.
If that kind of makes sense.
Yeah.
Because still, a lot of clients these days on bridging finance, they won't go for it because it is your 4, 5, 6, 7% per annum from an interest point of view, say including fees as well. But actually, it's a vehicle that's going to get them from A to B, and it's going to make them a lot of money. But again, people are that narrow-minded in certain circumstances that they don't look at that in value, do they? They just look at the upfront fees and think, nah, it's not for me. We'll go for a cheaper one. It's not always the best thing for them, is it? So I think the main point for me to take away from that is speak to someone amazing like you.
Dan, there's been a couple of more questions. We just tap into John because I want to give the next question I want to ask you, because I think it's a perfect question for you and Crystal. Stephen Lowe has said some lenders need between 80 and 100% of the shareholders held in directors' names. So this option can limit the lenders that limited companies could use. Yeah, there's always there's lots of lenders out there that don't really understand limited company lending is the best way to explain it, because the lenders who do are very relaxed with how that director shareholders work, because whoever signs the PGs, which in reality is normally the directors, but we're happy the children in effect having the shareholding, and the directors, the parents who are the PGs, not really having any shares in the property themselves. So I think this is, if you've got a scenario like this, would be ring Dan for the criteria of what lenders will help, and then John for how we touch that tax advice. But
so basically, to be a director, anyone can be a director, and as you say, the A shareholder in my scenario, the 80% shareholder, absolutely would be a director. Kids in the majority can be a director. What you need to make sure in that circumstance is shareholder control and board control are different things. So you need to make sure that your lawyer, it's called you've seen them, articles of association for a company, that dictates how a company is run.
Yeah.
So you need to make sure that for it to work as a control vehicle, you need to make sure that your director's powers are mainly with the A shareholder.
Yeah. John, don't you ask Stephen Birkin's one, Dan, because that's another one for John.
Yeah, no, absolutely fine. Thank you, Stephen. Yeah, another great one. So, can non-family members be part of the family investment company?
Absolutely. It's called family investment company, but it's a bit of a misnomer. It's a succession model. So if you have a non-family member that you wish to pass on your wealth or assets to through that structure, you absolutely can.
And then there was another one, I'll read it out. Justin Travers, he has a family of clients who own several properties, around 2.5 million in value. Only one of the properties is mortgaged. One of the family has been missing payments on the mortgage property. As it's in all their names, it's impacting on all the family members' credit. They are thinking of creating a company to put these properties into. Is this a good idea to help protect the credit ratings going forward? And what are the tax advantages, disadvantages of doing this? So I'll answer the lender bit, John, is the fact that let's just say us three here, we're all liable. I'm the one who's responsible for making the payments and I don't, it directly impacts you too. So whatever that is will be an impact on your credit file. The quicker that is, you stop that and you make the payments up contractually and get your payments up to date and your credit file back to zero, the better it will be. And I get from what you're saying here that you can't just do that. And my bit would be why don't you take over the other members should take over those payments and make sure those payments are made. But if there's reasons that won't allow to have like a central bank account to make those payments, it just seems that I think, John, you're going to come back. This could be quite a costly mistake to move all those properties, capital gains and stamp duty. It could be cheaper just to pay off that mortgage and isolate that one problem, because it depends how big the mortgage is, John, doesn't it?
I absolutely agree. You would very much need to look at the wider income of each of the individuals involved, the equity and gain in the properties. I think it said largely unencumbered. So definitely the gain that sits in the properties. The stamp duty land tax cost. It may be, once you've taken them all into consideration, that a company structure would work, but it's most certainly not definitely use a company structure in those circumstances. There's a lot of factors to consider from a tax point of view.
Yeah. And Stephen Law has asked the question, some lenders have limits of minimum age 18 to 21. Well, Kent Reliance will say any minors, so children of the directors under the age of 18 don't need to have to sign or do anything. You can have as many as you want. Precise is 21. So you can have as many children or grandchildren as you want on there. There's no restrictions whatsoever. So again, it's just pick the right lenders, I suppose.
Yeah, well,
it's done.
Yeah, no, I 100% agree with that. We get a lot of people coming to us with that sort of scenario where they've been to lenders that they know of that do limited company and just they don't entertain it. But again, it's just having that knowledge and experience within the marketplace in terms of criterias. But you're never going to know everyone's criterias because, well, you're just not going. As much as these sourcing sites are great, which they are, sometimes you just need to pick up the phone to someone like ourselves or even a BDM for a lender and just ask that question. But there's lots of options available. for that. So again, if you get stuck, Stephen, just give us a call. I know you do anyway. I love this question off Charlotte, and I think it's very 2021, if I'm honest with you, and it's brilliant. Roger, do you lenders have any issues with deposits from crypto? Just had a limited company buy-to-let decline with foundation due to the money now in a UK bank account coming from crypto, and can't see why this is an issue. I love that question.
Yeah, so the answer is 100% no. And you also have a duty of care as well. So when you are taking and utilizing money from clients, you've got to be able to do a full audit trail right the way back to that first penny. Where did it come from? So if it came from employed salary, you've got to be able to kind of show the audit trail of when they started saving that money. If it was the sale of a car or paintings or inheritances or however they've accrued a deposit, you need to be able to legally evidence all the way back. So does the lawyer need to be able to evidence separately where that money comes, and so does the lender. The reason that we say that we'll only take deposit monies from inside the EU is because we're able to evidence that trail all the way through. With cryptocurrencies, we have no audit trail to where that money was originated from, where the taxation was paid, and it's often associated with the dark web, where money's moved from countries to countries, those that are in the red list, those countries that exploit slavery and money laundering and drugs and all those areas. So because of that, and because of the regimes on us, on the lawyer, and on you as a broker, you've got to make sure you've got all that evidence on file. And with cryptocurrency, I don't believe it's possible. So at the moment, because of the money laundering implications and the fact that if we took cryptocurrency as a deposit and later on the serious fraud squad investigate, we lose our asset immediately, because they would just come and take that property and say we shouldn't have lent in the first place. So that's why we don't take that risk. John, I'm sure you will have something to say on cryptocurrency.
I've kind of built my business on the back of kind of going into those areas where other people fear to tread and doing it properly. So one of the other main specialisms of our practice at the moment is cryptocurrency and tokens.
What?
I know. Cryptocurrencies are completely unregulated. Now, it's not an issue from a tax point of view, because what we're doing is actually giving proper tax advice in relation to crypto assets. The issue with crypto assets is people think they're not taxable. And actually, people are doing hundreds and thousands of transactions moving between cryptocurrencies. And each of those transactions is a taxable transaction, because actually it's just a movement between a currency. And any gain or loss, you're technically trading. So your lady there who's kind of like, can I just put it into cryptocurrency? Yes, but actually you need to think about the tax position, about how that crypto is generated and what it's being held for. Secondly, if they're holding a crypto as an investment, a transfer to a company could give rise to a capital gain on the difference between the investment being held by you and the investment being held by the company. Thirdly, you need to consider the volatility in the crypto asset, because you may put it in, but the change in rates and the use of it will give rise to a tax charge. Also, the payment of the deposit, I can fully understand why it needs to be in cash rather than in a cryptocurrency, but that exchange from a crypto asset into a cash asset will also give rise to a tax point. So if people have got crypto assets and want to talk to me as well, very, very happy to do that also.
And Mark, I'm not trying to defend the bank's position. They acknowledge that crypto responses, but rightly or wrongly, the 20 to 45 age group are using crypto as a means of building capital. This prolonged challenge will only grow. I agree with that. I think it's just, as a lender, if there's an element of risk that money could be taken by the serious fraud squad and we lose our asset, we're going to be maybe last at the party to accept it. But maybe the works of the likes of what John's doing might be a way to be able to evidence that.
No, I will defend the banks on this regard. Crypto is completely unregulated. Its value is based purely on what somebody will pay for it without any underlying assets. It's completely without borders. It can travel across the world, and it's one of the main forms of money laundering, because it's so easy to move it around without being able to trace it.
because you hold the wallet and nobody can identify who is behind that wallet. So whilst a large number of people are using it and making sizable profits on it, and they are genuinely honest people, the amount of scams going on with crypto at the moment, the amount of criminal activity going on with crypto at the moment, and the lack of regulation anywhere on the planet, I fully understand why a lender would not want to use that as an asset at the moment.
Absolutely.
Well, I think we've done enough on crypto, Dan. I'd like to get into you because there is a number of the questions when I get through, and I think this is where Crystal shines. So please shine away, Chris Price. Chris doesn't do a lot of specialist complex lending, and there'll be a lot of brokers on here. We've got an anonymous broker who's new, and some other guys that are it's not the knitting, Dan. They get a case, they look at it and go, for the love of God, I don't even know where to start. But that could be worth a lot of money, okay? So when it turns up on the doorstep or on their inbox, tend to find themselves underprepared to say, hence the involvement in the webinar. So Chris, welcome. So if I get a case in now, it's come across the desk, I look at it and think, I haven't got a clue where to start, right? But I've got a feeling it'll go somewhere. What can I do? And what are the options you give me at Crystal, Dan? Do you want to take through how and what you do?
Yeah, no, absolutely. And do you know what? Your journey in the mortgage market will have started with that thought process. I have absolutely no idea what I'm doing. Newly qualified, do you know what? Young kid, whatever. And ultimately, you get your first resi case, buy to let, and you don't know where to start, but you build up your knowledge and your experience over time. And it's brilliant that you're on these webinars and that you're learning mostly around taxation, etc. And little snippets from myself and Rog, but that's how you learn. It's being involved in events, in webinars, that sort of thing. But ultimately, a lot of brokers these days, they are getting involved in areas which historically they wouldn't have been involved in. More so, you're looking at the adverse credit sort of cases, because if you look at the past 18 months, more and more clients have got themselves in financial difficulty, taken mortgage payment holidays without telling the lender, so on and so forth. And you wouldn't have historically dealt with these sorts of clients and lenders, so to speak, so you would have been stuck. And if you are not actively dealing with these clients on a even weekly basis, then criteria, policies and products, they're always changing, and it is an absolute minefield in terms of what you're doing as an advisor and who you've got access to, especially if you've got whole of market access and you're not tied to a certain panel. But where we can help and where we come in is we get a lot of brokers that will come to us, they'll have built a relationship on the back of, say, residential, buy-to-let, adverse, unusual property types, and they get a commercial case. And rather than saying no to it, they'll give us a call and say, right, I've had this case, I've got an overwhelming amount of information. What does it look like? How do we do it? How can we package it? And myself and my team can have that conversation with you, educate you, give you a commercial fact find, a development fact find, bridging, and it highlights what information we need as a business to be able to provide your clients with that solution. And that's kind of where you start, really. And what I would say is to anyone on this webinar, for your non-regulated business, so for your bridging, development, commercial, buy-to-let, all that sort of stuff, if you're getting something on your desk that you specifically aren't involved in, don't want to get involved in, it's out of your comfort zone, and you just physically don't have time, you can refer these sorts of cases to us. So as much as you could be an expert in bridging and an expert in commercial, so to speak, you've never physically had to speak around it, because we're working with you, for you, providing you with a service to your clients on a referral basis. So we're dealing with it from inquiry through to completion. You look like an expert that's passed it across to a team you work in partnership with, and you can crack on and deal with your day-to-day stuff. And that's what a lot of advisors are doing these days, because they're wanting to maximize their income potential. They're diversifying the clients and the sectors they're active in, but actually we're picking up the stuff that they're not comfortable with. Because let's be honest, most people on this webinar, again, it might be wrong for me to assume this, but you want to deal with your vanilla residential buy-to-let clients, doesn't cause you a headache, and it's nice and straightforward, and it's kind of churn and burn sort of business. But when you get something specialist, that creates a bit of a roadblock and a bit of a backlog for you, because you're not wasting your time, you're spending a lot more time trying to source a product and package a case up for a lender so you have the best possible chance of getting that accepted. And that's where we come in, because we act as admin. We source the deal, we provide you with terms, we give you justifications for the recommendation, and it cuts probably 6 to 10 hours of work out for you, because again, we know which lender's going to do it and what their criteria is. So I would say, Chris, is in a nutshell, is you might not do a lot now, but any support, help, guidance, training you need on any specific particular sector, come and speak to us. Even if you don't have any cases, I don't even want to put cases through us. We aren't on these webinars to get cases and get business and earn money. We're here to educate and give back and ultimately help more clients get business placed wherever it goes. So I'd say link up with someone like us where you can get the wealth, get the knowledge, get the experience, and get the guidance you need to become an expert in that particular area.
See, down the back of what you said, Kerry, thank you so much. That what you're going to do is look at, me and John can talk a lot about moving properties into limited companies. I can talk about the limited companies, the director's loan account, the shareholding, the criteria. John can talk about his bit. Anyone listening to the two of us will go, oh my God, it's too complicated, because that's at the high end, which an awful lot of brokers will never really involve John in doing incorporation tax relief. It's not something you do every day for everyone. So what John and I try to do in my side from the lending criteria side, and what John will do from the tax side, we talk about it, but in reality, when you get them, sometimes you're better off passing them over. From a tax point of view, John will do everything. He'll take that over. From the lender point of view, we can either try and simplify it for you to do it with some help from John. Remember, he sets up the limited company, he does all the bits. You just got to know it fits with the lender you want. So in reality, John can take away 90% of the problem, and you only need to leave a little bit, which Dan can then support you. But in the main, when you get a case like what Kerry's got, and it's about, and if she's right there, it's about not stepping over the line in tax advice. We know the lines, but it's about, you got a case on your desk, ring Dan, and then during that first 3 minutes, you'll go, I don't want to do it. I'll leave it and I'll refer it to Crystal, or I tell you what, take me on a journey, Dan. And remember, when it comes to tax advice, if you've done CMAP, you have got a level of knowledge. So if you were in the pub on a Friday night and you had a couple next to you having an argument about what is the difference between a fixed rate mortgage or a discounted mortgage, you could step in and give them a factual explanation. As you are able to explain to customers the difference between owning a property in personal names and limited company, we can do that appropriately and properly without giving tax advice. But there is a point where you've got to say, I can't go any further, and I need to refer this to an expert who can give you advice and knowledge and education. And I think that's the same when you're dealing with commercial and semi-commercial. And I think those are the points. Dan, can we do this live update that we've got for Crystal on bridging? Because I'd also just like to get your opinion with this as well, because of time. Is that okay?
Yeah, go wild. Over to you, Rog.
So Precise Mortgages have launched today, and we're doing this exclusive with Crystal as the launch. This is the first presentation I'm doing explaining this, and more to come from Adrian, Emily, and the teams out there. We've moved our LTV max from 65 to 75%. We've removed our maximum loan, so there's no maximum loan now at all. We've increased our AVMs, so these are automatic valuations, used to be at 50%, they're now at 60%. And that also used to have a charge of £99, that's gone. So if you're downsizing, so you have your property to sell and a property you want to buy, and let's say they're both unencumbered and you don't want anything above 60% borrowing, then we can do an AVM on both. Our rates have now dropped dramatically. We've got the cheapest rate at 0.49%. Sometimes by offering up 2 properties, you get a cheaper rate. Our refurb buy-to-let now will do 75% on the in and 75% on the way out. And I think that'll be at 80% soon. And the big thing we've changed on the refurb, light refurb policy is we'll now allow permitted development rights for change of use. So C3 to C4, internal configuration, conversion of a garage to another bedroom, or like lounge kitchen, as long as it's not a granny annex, and refurbishment of the loft space. So we really feel now when it comes to regulated bridging, it puts us back in the top pole position. And if you have short-term lending case and you think it's expensive, speak to Dan, speak to the team and really understand the value. and we can give you lots of examples where if the profit's there, it makes it right. And Dan, you are the leader in bridging. So any comments from you?
I'd just like to say welcome back, Precise. Don't know where you've been for the past 12 months, but welcome back to the marketplace and welcome back to having a decent product that is fantastic. I mean, at that LTV, at that sort of pricing, back to being where you were before, pre-COVID, in terms of market-leading product, rates, fees, and obviously service. You've got an amazing team, and now you've got, well, you're getting more and more as the months go by, some amazing products. So, yeah, I can see us doing a shed load of business with you on that basis. And again, you're right, we will not be beaten on bridging. We are the best at bridging. There's no comparison, really. We'll always beat any quotes that you've got. So if you guys, as an advisor, compliance will make me say non-regulated business, by the way. If you've got any non-regulated bridging finance, you've got a quote, the best possible quote in the marketplace you can get, come to me and we'll always beat it. Whether it's beating the rates, paying you more, whatever it is, as long as I've got that direct comparison, that's legitimate, we'll always beat it. But no, that's a really good product. Again, 1.5% lender fee, and you're going to get a pay away of at least 1.1%. Why wouldn't you? And for those of you, again, that aren't in bridging finance, there's a lot of money to be made. It's the simplest part of finance that we deal with. It's a lot simpler than residential buy-to-let and commercial. So after this, if you want to learn more, earn more, speak to myself and speak to the team. But no, it's good to have that back, Rog. So I imagine that will fly off the shelf. Is that limited time only, or is that here to stay?
No, it's back. It's full time with us. There's a lot more changes to come. It just takes us back to being number one in a regulated space. So when you actually understand, people think bridging's expensive. That means you've sold it incorrectly, because if you're taking bridging, like one of our biggest areas is older people downsizing. They found the dream house. They want to move in 2 weeks' time. They don't want the stress of a chain to sell. They've made maybe £500,000 on the property they want to sell. And what they want to do, Dan, is they want the control to be able to move into that property as quickly as possible. They don't want the health issues, and that has a real return. So it's not unusual for us to do a £2 million downsize. Our refurb buy-to-let product gives the surety of exit. So if you're finding a property with an F rating, you want to get it to an E rating, you want to improve the value, and you want to capitalize on that, Precise will give you 2 offers, one to buy, one based on the after value works that can be drawn down within 30 days of owning the property. Crystal will take you through this, but it means that you get property acceleration, and we can talk about that another time.
100%. So you've got market leading bridging there, and you've got InterBay, which have the best semi-commercial deal in the market. So things are.
And Dan, there was one question on here, and we'll make sure the last question goes back to the wizard. But there was another one here from Ferry was saying, looking at cases of semi-commercial. So Dan, let me just give you a scenario here. John and I, we have a lovely little cafe, and the two of us bake the best brownies and make the best coffee. And we've run that, me and John, for 4 years successfully. The building that we rent the ground floor building, but the building above us, there's 3 2-bedroom flats. And our landlord, Derek, is going to retire, and has come to me and John saying, do you want to buy the semi-commercial premises that you have? The rent roll on the flats alone will cover and service any debt. And that's quite a common one. So if we've got a case like that, can Crystal place it, and other lenders that would look at that? Because I believe InterBay Commercial would do that with a smile.
Yeah, I believe so. And I believe they do that at 70% at 4.89 at a 2-year fixed, which with a 1.5% lender fee as well. Which that's not a plug as well, and I'm only saying it because it is the best product available in the marketplace by far. Anything that's even close to that, you're looking at kind of 5.5 plus in terms of what's available, because yeah, you're just outstanding in that. And we're doing a shed load of business, and we're getting a lot of people that are ringing us up that have never dealt with us before, but because it's a semi-exclusive, they're whacking that business our way, because otherwise you're looking at in the 5s. So yeah, you've got some fantastic products available, and you'll actually, do you know what, you'll actually do it as well. So it's not one of these unicorns which you're in 4.89 is the headline rate, and you actually come out with 6.99 because of some caveat or a valuer's comment. So yeah, anyone has a semi-commercial deal that's pretty much similar to what Rog mentioned there, then speak to us, because we've got some fantastic exclusive and semi-exclusive products available, and that's specifically being number one.
We've got, let me, Dan, because I've got my head around this. John, I'm going to bring you on this, right? Because this is a different direction than the usual sort of questions you get asked, but this works well with Alexander's. So Mark Atridge has asked, most of his business comes from commercial and corporate bank managers.
Yep.
I tend to look at mortgages for business owners who are businesses with 5 million plus turnover. We are now beginning to see the 2020 annual accounts where the true impact of COVID is shown, but the P&L is loss-making due to the lockdown and social distancing. These businesses generally have had the balance sheet strength to absorb losses, but have had few lenders, Foundation, Accord and the Corp, shy away from what I think should be a straightforward deal. If the scenario underwriters can take a view on COVID, does the panel have any thoughts of lenders? Now, with Precise and with Kent, we'll do different things. Like one, let's just say your accounts from over a year ago weren't that good. We're quite happy if you have a relationship with the customer, John, to do as accounts for the last 12 months. So literally, if you were to go back 12 months, you normally find that's different than if the accounts we're using were from 18 months ago. So Precise would be happy as long as there's a relationship with the chartered accountant and a proper firm like yourself. If you could do us the most up-to-date 12 months, we can use that. Or sometimes if they're self-employed, we could use the tax return that they could do now, which ends in April of 2021, that they would use for the submission in 2022. Or the last point before I pass over to you, John, if your first year's trading was you'd written off losses and startup costs, you're halfway through the second year, but your projection looked really good, John.
Yep.
Kent Reliance can work off a projection of income as long as it's given with a covering letter from a chartered accountant confirming the happy. We can go up to 30% increase on the first year's accounts. So from your point of view, what could you do to assist to give a real up-to-date overview of the customer's income that I think will be much more reflective?
No worries. So, and you're dead right. What we're finding from lenders at the moment is that they are placing large amounts of reliance on the financial information. So those kind of businesses, and even personally, you really need to keep good records of what your income is, what your expenditure is, your exposure, your debts, because poor record keeping, late tax returns, errors within your financial information will put lenders off, will absolutely put lenders off. Things you can do to improve. One, good systems, management accounting, and a good piece of software for your accounts. That's going to be beneficial in many regards, particularly as it's slightly related. Tax is moving to be digital over the next 5 years. So you will be required to report on a quarterly basis in one way, shape or form to the revenue. Secondly, good management accounts, because not only do lenders want to see that you have your financial accounts up to date, but your financial accounts, by the time they go in, are often 9-10 months out of date. So they want to be able to see what the most recent position is. And as people are recovering from the COVID position, if they've got decent monthly or quarterly management accounts showing that that position that can be relied on or have been produced by a chartered accountant, that has often improved the situation. And lastly, as you said there, Roger, financial forecasting, but proper sensible financial forecasting based on your historic accounts, proper accounting principles, and a realistic growth forecast.
And do you know, John, you couldn't have put this better. Guys, out there are accountants and accountants. What John's team will do, and I'm sure there's others like it, will have a real relationship with the customer. And if a customer is needing to obtain business finance or residential mortgage, having a covering email from a chartered accountant is like the word of God, because they cannot tell lies. They've got to give the facts and the whole facts, which will correlate with bank statements. And by being able to have that with a set of accounts explaining to the underwriter where the income is, and yeah, the applicant's going to have to pay for that extra work, but paying John to really give an opinion and a projection of income and do that forecast, prepare that accounts, will make the difference between obtaining a mortgage and not. And when dealing with the self-employed, by contacting the accountant, so in that situation, if you were to contact John, say you're dealing with a mortgage for his customer, and by explaining to John what you want, it would most likely impress John to might actually think about referring customers of his to you. So think about that relationship does work, John. Your value in this is massive, isn't it?
I think so.
And just quickly from a point of Dave Evans, a question, Dave says, but do you still have different minimum loan amounts for the bridge and the buy-to-let on the refurb buy-to-let products? Great point, Dave. If you either go to the Precise Mortgages website, the bridging section, or Crystal Mortgages help desk, they'll be able to give you the PDF for that. The minimum loan, or the minimum property value on refurb buy-to-let is 75,000 outside of London, 100 inside, and the minimum loan is 50,000. So minimum loan's 50,000, minimum property value is 75. That's how it works on that one. So Dan, we maybe have time for one more question, or is it a matter of now I think maybe now is to summarize, isn't it? Because we don't want to run over the hour. Because I'd say, guys, anybody coming back again, one question here is the pros and cons of what is a limited company. So we've asked, there's a guy or a lady's asked about what is a limited company. Can you kind of explain it to me? And what's the cost involved of moving from personal to limited, which we've done all the way through. I think we'll put that as number one question to ask John next time, because for John just to redo that again, and honestly, those that have heard this 10 times will still enjoy it. We're going to get John, if you tune back in, Dan will come out with the date in the next week or so when we're doing our Christmas special, and we're looking at the highlights of what we've done this year. The number one, Dan, I think, question is moving properties from personal to limited.
Yeah.
So Santa Claus there, who's losing weight, something rotten. I think, John, will you come back and will you start off with the next one, taking us through the costs of incorporation, either where you pay the full fat, yep, capital gains and stamp duty, or yep, possibly not. So you'll come and do that with your Christmas.
Certainly will.
So Dan, over to you.
Perfect. No, again, thank you. Very informative session. I don't think it's been as heavy as it was last time, which is brilliant. I think it's been the right level and depth of, well, answers and knowledge, really, John. So thank you. But no, thank you everybody else for coming on, joining, making this interactive and making this series what it is really. Because again, if we didn't have all these amazing questions and the footfall and attendees that we have, then this would have stopped months ago. So it's brilliant to see that it's still continuing. Yeah, gents, thank you very much. And John, more importantly yourself, thank you, because as much as you don't get paid for these webinars, we don't get kickbacks, we don't work in partnership with each other. We've just built a great relationship over the past 12 months in terms of helping people. So if anyone wants to hook up with John after this, then that sounds wrong. If anyone wants to potentially do business with John after this, his details will be sent out. There is a caveat there that John will not be giving out his mobile number as such. He'll give out his email address. So if you want to ask any questions or look,
we'll have a conversation afterwards. It's just, yeah, I don't want the phone ringing off the hook.
Yeah, exactly that. But no, you're definitely invaluable. And then obviously, industry legend Rog is also invaluable because he has some great stuff to say. But yeah, that's pretty much it really. So we'll be doing another one. I believe it'll be middle of December. So the run up to Christmas, it'll be a Christmas special. We'll have John dressed as Santa and me and Roger as little elves, because I think that's quite fitting to do it that way around, because again, John is the star attraction of this show. So please, hopefully, come on, ask questions, we'll have a bit of fun, and again, we'll just make this last episode of this year a really good and interesting one, and we'll focus on what you want to discuss. But that's it from me. That's it from all of us. Thank you very much. Any questions you got for myself and my team, please get in touch if you want to learn and earn more. then we can help you, we can educate you, and we can support you in whatever way that you need. But have a great day. Enjoy Thursday. Have a great weekend, and we will see you on the next one, hopefully.
Take care, guys.
Thank you. Speak soon. Bye.